Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. Balancing accounts. So we'll discuss this. So before this, you can just try answering yourself and you can cross check with the answer. Which of the following account is most likely to have a credit balance? So a capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Always. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, then it is debit balance. So since it is not clear, we will assume, so we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed, so balance, so we have to add it, 234. So that is balance. See, balance is 234, so it will be carried down, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So we have to just put the total and carry forward to trial balance. Discount received account. So 110 plus 120, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340 and this side there is total of 740. So what we have to do? So 1340. So this side, to make it 1340, so it is 740. So 700. So if we put 700 here, so that will be balance carried on. Balance carried on. So 700. So both the sides, the always total should match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be 1340. Next, A and B limited. A and B limited account, sales. So total sales. So we have sold to A and B limited and we have not received any money from them. So we'll just check. Okay. So 700 plus 450 is 1150. So 1150. So it will be balance carried down. So 1150 will be the balance carried down. So both the sides it should be 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received, we have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing at all. Motor vehicle. So balance carried on, same amount. So that both the sides is the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 220, 45, 265. So 900 minus 265. 635. So balance carried on is 635. So the total, if you put balance, it will be. So to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance carried on will be this side. So 5,300 minus 3,500. So 1,800. So balance carried on will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances while trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities,